All right, let's finally take a look at Berkshire Hathaway's cash pile here. We teased this one earlier on. The cash pile has reached a record $325.2 billion in the third quarter. This as Warren Buffett continues to trim significant stakes, including Apple. Berkshire's holdings in the iPhone maker are down 60% since the beginning of the year. Joining us now, we've got Lee Munson, Portfolio Wealth Advisors President and CIO. Lee, always a pleasure to grab some time with you here. So, I mean, the significance of this cash pile and dry powder that you got to imagine is going to be put to use at some point or another. Are there top areas that you would be keeping in mind that we might see Berkshire Hathaway eventually put some of this cash pile to use?
Well, there's a couple places that they really love and they're really working. First thing is aerospace. I mean, when you look at their industrial sector, which is about 30%, it was pretty weak, sort of hit and miss. But aerospace, Precision Cast Parts is one of their companies. That's a place where you're seeing big double-digit revenue, earnings. Everything is there. I'm a big fan of a little mini Berkshire Hathaway called TransDigm. Love that stock. And that's what they're doing as well. They're just buying up all these OEMs, all the parts for that. So I think that that's a place that I would spend a lot of attention on. I think also energy. I mean, obviously, Buffett is pouring tons of money into Occidental. I don't really see anything outside of that. So all I can tell you is, for Warren Buffett, this is a classic move. He's a contrarian. He wants to pile up cash when things are going well, and then he wants to see what he can buy, when we're going to have some changes next year. And I think just the interest rate volatility, the uncertain about what interest rates are going to be next year, it's going to create some opportunity, especially in companies that are heavy on fixed assets, those industrials, materials, things of that nature, where those interest rates can really, jack with the price of stock and the enterprise value. That would be where, outside of that, I felt there's a pretty dull quarter. I think it's telling that he didn't do any buybacks, though.
Yeah, certainly. And Lee, that's one of the things that jumped out to me. Just real quick, the follow-up on the cash pile, though, the fact that we are at a level that we haven't seen before, just what do you think that speaks to more macro level wise, just in terms of how hard it is to find a good deal in this environment?
Well, my whole life I've been hearing about how Buffett's cash pile has never been larger. It's kind of like listening to politicians talk about the national debt. It just gets bigger and bigger and bigger. And it's true, he suffers from a size issue. What can he buy? He has to buy the whole company. I don't necessarily think that the fact that it's an all-time high says as much as we do where, the buybacks, I think, says the most. He thinks that even his own company isn't worth buying back right now. And so I think you're going to have to see a market that trades much lower in valuation before you get him to do anything. And if he does anything that's not in a market that's getting crushed in its valuation, I think it's because he's going to look at things that he knows best or that are doing best. And that's going to be in energy or in some of these industrial aerospace things that have been working well.
Where do you then, on the other end of this, expect him to continue trimming? I mean, he's already pulled back so much on Bank of America. We were talking about some of the trimming within Apple as well, which had been and was one of the largest positions and continues to be a more outsized weighting at the company here. But where else could be next?
I don't know. It's been 8 consecutive quarters they've been net sellers. And earlier this year, there was this, we don't really know why they sell. That's the other thing. We talk about it as if as if I have a cell phone directly to Warren Buffett and I chit chat before I come on.
You don't, Lee?
No, I don't. And I always feel the other analysts, they always come off like, well, I was just chatting with Buffett. And that's not the case. There are articles written this week about like, oh, he sold Apple because of capital gains concerns. There were just little comments that he made back in May regarding capital gains going up or down. So I think when you have to look at this, we don't really know what they're doing. We also have a 94-year-old dude and 2 people who are not spring chickens under him. And so I think that thinking that we really understand the Grand Master Plan, I think the Grand Master Plan is they buy stuff when it's attractive, and when things get to a certain point, they take money off the table. I don't really see him selling much more going ahead. I think the Bank of America was this big 10-year bet they're winding down, and Apple's just obvious. When you buy something years ago and you get 2, 3, 4, 5 times on your money, it's okay to take a little profit. If you read Berkshire for years, he always says, 300-400% profits. You can take a little off the table, pay some tax.
Lee, what's it going to take to see a more of a risk-on approach then from Buffett?
I think that we're going to have to see a very different price in the overall market. I think that we're going to have to see earnings come in. I think we're going to have to see some sort of break in interest rates. I think if we see interest rates trend above 4.4, 4.5, 4.6, I think that's going to make a rumble in equity markets. Also, we've got a historic election this week. And I think that either party could cause enough volatility to start a trend. I think you're going to have to wait until next year before you see Buffett make a move. I don't think we're going to see markets get cheap in the next 3 months to do anything interesting.